What's up, Wolfpack? Welcome back to another breakdown, right? Today, we're going to be talking about something that the market does every single day, but most traders never understand it, all right? Mitigation. This is why price comes back, taps a zone, and then makes the real move, okay? Once you understand mitigation, the chart starts to make a lot more sense. So, what mitigation actually means? Let's keep this real simple. Mitigation is the market coming back to reduce risk and refill orders. Institutions don't always get all their entries filled during the first big move. So the algo brings price back to the zone so it can clean up unfinished business, mitigate that position, and then send price where it was originally headed. All right? And retail thinks this is a pullback. Nope. It's literally the algorithm coming back for the rest of its food. When I say that, all it means is that the market or the people in the market think this is going to be a pullback, and it's actually the market algorithm coming back to take those liquidity. All right. So, smart money doesn't place one big order, they scale in. This is why mitigation happens. That big wick that swept liquidity, that's only part of their position. The displacement candle that comes after it, all right, that's when they really load up. But guess what? The market moves too fast and sometimes leaves an imbalance, which is called an IFVG. That imbalance becomes the mitigation zone. Unmitigated zones act like magnets. Price always gets pulled back to them, all right? For an example, real quick, let's go up here. Do a quick replay. All right. You see this IFVG that's right here? This one right here? Here, I'll even circle it for you. Watch what happens with price. Came and took it. All right? It came and took it perfectly. It's always going to get dragged or pulled back to it, no matter what. All right? So the part that clicked for me is the IFVG retest is the mitigation. That's why my whole strategy works so clean. You got the sweep, the displacement, then IFVG, and then the retest. The retest is literally the algorithm coming back to mitigate leftover orders. If you're wondering why the retest works so consistently, that's because it isn't a retest, it's mitigation. Big difference. Let me break this down clearly for everyone taking notes. Price sweeps liquidity. Price sends a strong displacement candle. That candle leaves an imbalance behind. Price returns into the imbalance. The zone holds. No strong candle closes through it. Boom. Mitigation complete. Price continues the original move. All right? If it breaks past the zone, then it wasn't mitigation. That was the market changing its mind. What is not mitigation? Here's what does not count as mitigation. Slow drift back into the zone, choppy sideways action, a candle blasting straight through an IFVG, or multiple retests. That's just indecision. When the retest is valid, you'll see a clean rejection. It should look decisive. Mitigation hits once, maybe twice, and then it's gone. If price is hugging that zone for 20 minutes, just stop. Don't even worry about it no more. All right? So, check this out. Here's liquidity. Okay? Liquidity. Right here. Down here as well. All right? New York is going to run through it. Watch what happens. Ran straight through it. Then right after that, displacement. Right here. Displacement candles. Okay? Imbalance. Coming back up to retest it. Rejected off of that, which means that it held. Then price came back up, taps it, and mitigation. It came back up, tapped it, mitigated. All right? And look how it shoots straight through. Well, as y'all saw, it already shot through the daily levels, but I don't have day levels marked up on this chart. If I go back to this one and then mark out the daily levels for you real quick. Here and here. Go back to the 5-minute. What did it do? It came and swept right through it. Shot straight through it into that daily level. And that's how you know it wasn't random. That's the algorithm finishing the job. All right. All right, Wolfpack. We're about to recap real quick. You got the mitigation, which is the algo coming back to balance out price and fill leftover orders. It happens after a sweep, displacement, and usually taps the IFVG. Once mitigation hits, that's where continuation comes from. This is why I trust my retest so much during New York. It's not luck. It's literally how the market delivers price. All right. And that is going to be the end of our stream. I want to say I greatly appreciate each and every single one of y'all. I hope that y'all like this video and you find it educational for you all for your trading. Have a great and wonderful night.